Have you ever wanted to understand crypto, but you don't know where to start? You don't want to hear all the tech jargon. You want a simple way to understand why some of the biggest companies in the world are jumping into crypto with both feet. If that's what you're looking for, this video is for you. I'm going to break down the basics of cryptocurrency and decentralized finance and why it matters to you and everybody else on the planet. And if you're a business owner or leader, you're going to see how cryptocurrency can actually give you an advantage in the marketplace. All right, let's jump into it. Let's talk about the problem that crypto helped solve, which is moving money between two parties. For thousands of years, commerce has worked in different ways. First, you had bartering, which existed for a very long time, but there was a problem there. There was no real unit of account that was universal amongst all people. Goats and swords had different values. That made it very difficult to figure out how much something was worth. So we needed a unit of account that we all agreed upon. After this money was invented, we needed a place to store it. It didn't make sense to just hide it under your mattress. So banks were invented literally thousands of years ago, and they were able to help preserve the money, control the money. And that led to many positives and that led to many negatives. But there literally was no other way. You either self custodied your money, you held it, and prayed nobody broke into your home and stole it from you, or you put it in a bank. Those were essentially your two options. As time marched forward, eventually we got a form of electronic money in the form of credit cards, where merchants and consumers could do business with one another without having to share any critical information. You didn't need to do a bank transfer or write a check. There was actually a middleman, which was a bank and payment network that helped facilitate the transaction. And that worked super well. And companies like Visa and MasterCard and American Express grew substantially because they provide a service. They help move money between two parties in a trusted way. That's the key. There really was no other way until PayPal came along and enabled kind of peer-to-peer transactions to take place, still through a third party that governed the transaction, but they were really the first ones to enable peer-to-peer payments that wasn't through necessarily a credit card or debit card. But that all changed with the invention of Bitcoin, which is the original cryptocurrency. Here's where the revolution began: a purely peer-to-peer version of electronic cash that would allow online payments to be sent directly from one party to another without going through a financial institution. A very short sentence that is reshaping the financial markets all over the world only 17 years later. Here's the traditional privacy model. You've got the identities, the transactions, the trusted third parties, and the counterparty on one side of the equation. This is all happening in private. Nobody knows if John buys something from Jill. It's all private. The public is on the outside. But what crypto did is it allowed the identities to remain private, where all the transactions are public. So there is a ledger, a public system where everyone in the world can see every transaction that has ever taken place. What's cool about this is it actually eliminates, contrary to popular belief, any ability for fraud to take place. Because if you try to put a transaction through the network and it is not confirmed by everyone else using the network, it is rejected. Now, I know you've heard people have lost millions of dollars, but that happened because their seed phrase, meaning basically their bank account information, was leaked, or the exchange where they were housing their money, where they were storing their money, was hacked. The network itself has never been hacked. In fact, it's the most secure network on planet Earth. Let's break this down one step further. Let's say Bob has a good or a service that Alice wants to purchase. Let's just say it's a jacket. Alice can give money to Bob and he gives her the jacket. Very simple. Now, if you want to purchase something online, it gets much more complicated because Alice and Bob are not standing right in front of each other. They don't trust each other because they don't know each other. So we need multiple third parties to facilitate this transaction. First off, we need Alice to have money in a bank or have access to credit through a credit card. She is going to use a payment network such as Visa or MasterCard or PayPal, and Bob's bank is going to receive that money. Then Bob will know that and be happy he got the money, and he'll be able to send the item, in this case, a jacket. So here's how traditional finance essentially works. But blockchain technology flips that on its head. It's peer-to-peer, and the network itself facilitates the transaction. So you don't need a middleman. There's a public record of every transaction that's ever existed on the blockchain, It's extremely secure and trustworthy. Again, the most secure payment network on planet Earth by a landslide. And of course, that means it's a threat to major banks, to Visa and MasterCard. They don't want their business disrupted, obviously. And one of the best parts, it offers extremely low fees, way cheaper than any credit card. And this is, I would argue, a massive revolution in finance. Now, let's talk about some real world use cases where crypto is a better option, or at least a competitive option, to traditional finance. The first one we already covered, which is being a payment network between two people, offering lower fees and advanced security systems. The second one is smart contracts. This was established originally by Ethereum, which you've probably heard of. It's the second largest crypto in the world at the time of this recording. And why Ethereum is so special is because it enabled people to build on top of it. Much like Apple released their iOS back in 2007 and said, here's the canvas, build whatever you want. And people have built amazing applications on top of Ethereum. Much of the financial market in crypto runs on the Ethereum network. Just like most of the apps on your phone run on iOS. One of the best use cases I've seen in crypto, aside from being a payment network, is the ability for regular people to participate in that payment network and earn fees just like a bank does. Let me show you what I mean by that and how participating in this ecosystem allows regular investors, business owners, and business leaders to earn outsized returns on their capital. But real quick, I just want to say this is not financial advice. This video is for educational purposes only. Now let's jump in. Now, when you're thinking of traditional finance like the stock market, you're taking money and buying a stock. Or in this example, you're taking money and buying Bitcoin or another crypto. That makes sense, right? It's the same exact approach. However, most of the crypto transactions happen what's called on-chain. They happen on the network itself and not a major exchange like Coinbase that you may have heard of. This is called swapping, and this is where most of the action takes place in crypto. You're swapping one asset for another asset, one cryptocurrency for another cryptocurrency. And there's a lot of reasons for this. Some of the most important are that most cryptocurrencies can't be bought on a centralized exchange. Therefore, the only option is to swap between two cryptos. Also, many countries don't have Coinbase or access to a centralized exchange, so they rely on swapping. Now, here's where it gets interesting. They use a liquidity pool to swap tokens. Just try to imagine a digital account filled with two assets, 50% of one and 50% of another. Let's, for this example, say it's dollars and euros, a non-crypto example, because I think the analogy is easier. Every day, people want to swap between the two. You're going on vacation to Europe, you need to convert your dollars to euros, or vice versa. Or businesses are doing massive international transactions with a company overseas, and they need to convert that money. There's a middleman, usually a bank, that helps assist with that, and they take a fee, right? However, in crypto, it works differently and gives people the advantage to participate in this payment network and make money for doing so. So take a look at the blue circle on the bottom. That represents a liquidity pool. 50% of one asset, 50% of another. Let's just say it's Bitcoin and Ethereum for this example. Here comes a liquidity provider. This is anybody who wants to do this. They can take assets. Let's say they have Bitcoin and Ethereum. They take those two assets and they deposit them into this pool of money with dozens, hundreds, thousands, or tens of thousands of other people who all pool their money together. This provides the liquidity for the trader who wants to swap between the two assets. So the trader over here on the right, they have Bitcoin, but they want Ethereum. So they swap between the two assets. Or they have Ethereum and they want Bitcoin. They utilize the money in the liquidity pool, the assets in the liquidity pool, to be able to facilitate their transaction. And of course, just like any other payment network, they pay a transaction fee. Except here's the magic. Instead of that money going to Visa or MasterCard or the bank, it goes to us, the liquidity providers. The people earn the money here, not Wall Street. Now let me show you what's possible. You won't believe it at first because it seems ridiculous, but let me explain how it works and why it works. These are actual pools. This is my actual results. Across the board here, I've got about $40,000 in these particular portfolios. I have others, but around 40 grand in here. And you can see the estimated monthly rewards. These are not static, but you've got over $100,000 a year of yield this money is generating. Now, your brain says that's not possible. No one would pay you that much. You're right. No one is paying me that much. What's happening is crypto is growing, and there's so many transactions going through these pools that this tiny fee that all these traders are paying is adding up to these numbers. There's so many transactions going through. Think about a store that does a lot of transactions. They end up paying a lot of money to Visa or MasterCard. Who's ever processing the transaction is making all of that money. Like I said, instead of Visa or MasterCard processing those payments, we're doing it. Regular investors. That's one of the magic parts of crypto. It gives the power to regular people. So if that's something you're interested in and you want to understand crypto deeper and understand how to deploy those DeFi portfolios to experience similar results, then I invite you to apply down below to our DeFi Accelerator program for business leaders and accredited investors. My team and I will bring you through step by step exactly how it works and help you deploy these type of portfolios. You can go from a complete novice to a pro in just 6 weeks. Now, let me give you some other examples of where crypto is so powerful. One of the biggest trends you're seeing in crypto is the tokenization of assets. Just like a company would sell shares or a small interest in a piece of real estate, for example, tokenization is changing the game there. They call it real world assets, and it gives companies or debt instruments or equities the ability to tokenize. It makes investments like real estate or companies way more liquid because they can be traded very simply. It provides total transparency on everything, every step of the way. And this space is growing by billions of dollars every single month. Wall Street is foaming at the mouth to get as much money as they can into real world asset projects. Let's reverse engineer what I'm saying. So imagine you own a building and you want to be able to sell equity in that building to investors. That is a very complicated process. And to even know that there's a building that you could invest in, you'd have to know the right person and have that brought to you. So there's really no marketplace for such a thing. But by tokenizing that building, it gives the ability for hundreds or thousands or tens of thousands of people to own a small piece of that real estate. Imagine owning a tiny fraction of a building in New York City. The operator would be able to finance that purchase, for example, with the joint money of everybody who purchases the token. Then they are, of course, collecting rents from that building, and they can pay you a dividend. And it's very easy to pay because they're paying it directly to your crypto wallet, the wallet you have used to invest in the token. It's very easy to process payments in that way. Just try to imagine trying to sell a tiny piece of equity to thousands of people for a building you own in New York City. The paperwork alone would be such a nightmare that no one would ever do it. Tokenization changes that. And it's not just real estate. The possibilities are endless. People are doing this for companies. They're tokenizing their company, which is way cheaper than going public and more efficient. They're also doing it for IP, intellectual property. Imagine you owned 5% of a patent through a tokenization vehicle, and you're paid your distributions on the earnings of that patent on a quarterly or monthly basis. How cool would that be? That's all happening right now. What I'm trying to say here is crypto gives regular investors, business owners, and leaders the ability to participate in financial vehicles that were typically only reserved for banks and financial institutions. And that is shaking everything up. Here's a great example. SoFi, $36 billion company, is going to launch Bitcoin and crypto trading services. They're doing this because they see this industry is growing like a hockey stick straight up, and they want to capitalize. You've got Western Union, one of the biggest money remittance companies in the world, launching their own stablecoin on Solana coming in 2026. Countries all over the world are looking to adopt a strategic reserve to hold Bitcoin in their treasury. Just this week, France introduced a bill, and we have Germany introducing a bill as well. The United States government, for example, already has a strategic reserve, and they're going to likely add to it over time. Any market can essentially be transformed by crypto. Everything from payments to tokenizing assets to remittance and everything in between. Crypto essentially provides rails for commerce to happen more easily with less friction and provide an advantage for the individual investor. So there you have it. There's the basics to understanding crypto and how it is fundamentally reshaping financial markets all over the world. I personally believe if you're not looking at this industry, you're making a mistake, and the time is now. I always hear I'm too late to the party. I don't believe that. I think we're in the first or second inning. Sure, we're not tailgating the parking lot anymore, but there is still a massive advantage and an early adopter advantage right now. And two last quick things. One, if you want help from me or my team, don't forget to scroll down below and schedule a call with us. We can help you set up some sophisticated DeFi portfolios. And number two, don't forget to like and subscribe because I'll be dropping more videos like this and providing as much information as I possibly can.